Hello and welcome to our team's case analysis of Toyota. We are Team 3 that consists of Ariel, Jameson, Kevin, Abernoff, and Brian. We will explore the background, SWOT, and five forces, corporate strategies, and company performance. We chose Toyota because they are a global company that has a history of innovation and growth with forward-thinking strategies. But before we begin the case analysis, we will provide a quick introduction on Toyota. Toyota is one of the world's largest and top automakers. They're headquartered in Tokyo, Japan. They're number 8 on the Fortune 500 list, and they've actually been there for the last 22 years. They have over 36,000 employees, and they are the number third for the world's most admired
Now let's discuss Toyota's background. Toyota was established on August 28, 1937 by Koichiro Toyota, the son of Sakichi Toyota, who was referred to as the father of the Japanese Industrial Revolution and the king of Japanese inventors for his extensive catalog containing hundreds of patents on textile weaving machines. When Sakichi died, Koichiro took over his father's work. With his invention and modifications of the automatic loom, Koichiro established an automatic loom manufacturing company called Toyota Automatic Loom Works in 1926. Koichiro had always had an interest in manufacturing automobiles. When the Great Depression started, the company's sales also took a hit. In an effort to increase diversification, the company started an automotive department on September 1st, 1933, that focused on developing vehicle prototypes. In March of 1934, a prototype plant was completed that contained a sheet metal and assembly plant, along with a warehouse and a materials testing and research office. A couple of months later, the first prototype, the Model A1 passenger car, was developed. In September of 1936, Toyota Automatic Loom Works was licensed under the Automotive Manufacturing Industries Law and became obligated to establish automobile mass production systems. This gave birth to the erection of Toyota Motor Corporation as an independent company. Shortly after, the Koromo plant was opened, and just in time production, a core of Toyota production, was introduced. This production strategy aims to increase efficiency by eliminating excess labor and time. An item would not be made and delivered to the assembly line until it was needed. However, the concept of just in time production would take off later in the 1950s. During World War II, Toyota supplied trucks to the Imperial Army. The 4-ton model KB truck is an example of one of those trucks made for war. Luckily for Toyota, the war ended before the scheduled date to destroy its plants. In 1957, Toyota started a sales company. The car models Crown and Crown Deluxe were exported from Japan to the United States. The Motomachi plant was completed in 1959. Toyota released 4 new passenger car models: Corona PT20, Crown PS40, Publica UP10, and Corona RT40. With the introduction of the Total Quality Control in 1961, the initial quality of new passenger car models improved with each subsequent production start. There was an attitude that quality could be improved by thorough inspection. These efforts bore fruit with the smooth production of the third generation Corona. Toyota received a quality award, the Deming Prize, with these new initiatives. With the growth of Japan's middle class, demand increased for a more luxurious economy car. Toyota released the Corolla in 1966, placing privately owned passenger cars in the center of the car market. Toyota received its first Japanese Quality Control Award in 1970. In 1982, Toyota Motor Company and Toyota Motor Sales merged into one company, the Toyota Motor Corporation. In the late 1980s, Toyota began to produce new models like the Camry. They also launched a luxury division, Lexus, which recorded the highest sales in the luxury vehicle market in 2000. In the 1990s, the U.S. automotive market grew steadily throughout most of the decade as the overall economy expanded. More than 17 million vehicles were sold in the year 2000. Although the market declined due to the IT bubble and rising gasoline prices, Sales were steady at 16 million vehicles annually through year 2007. Toyota secured the number 2 position behind General Motors. During this time, Toyota entered new global markets with the release of several new SUVs, minivans, and pickup trucks, which were popular in the US. The market took a dramatic dip in sales during the recession of the late 2000s. Toyota survived and also released the hybrid Prius to address global environmental problems. Toyota set production records as the first automotive company to make over 10 million cars annually. Today, Toyota Motor Company is one of the world's leading automobile manufacturers. One of the company's main goals is to increase the expansion of environmental technologies through plug-in hybrid and electric cars. Toyota started the Toyota Smart Center, a unique energy management system for centrally controlling energy consumption by connecting homes, cars, electric utility companies, and users.
Now that we have looked at Toyota's background, let's talk about company's strengths and weaknesses through SWOT analysis. Toyota's main strength is in strong focus on research and development. Toyota is famous for its innovative culture. The company's focus on being ahead of its competition by introducing some of the most innovative vehicles in market have proven to be a successful choice. The company operates 17 research facilities in 8 different countries. Focus on innovation has resulted in one of the highest automotive research and development spending. Toyota total expenditures were approximately $9.37 billion in 2016, compared to $7.5 billion to General Motors. Only Volkswagen is spending more on research and development than Toyota. Huge efficient R&D spending has allowed Toyota to introduce the best-selling hybrid vehicles. Toyota's other strength is in being most valuable automotive brand in the world. According to Forbes, Toyota brand is world's sixth most valuable brand, estimated at $42.1 billion. In Forbes, Toyota is listed as number one automotive brand in terms of value. Brand value is closely related to brand recognition, which means that Toyota is world's most recognizable brand in the world. Another strength of Toyota is its Toyota production system. It's a world-renowned manufacturing system developed by Toyota engineers. The system's philosophy is to eliminate all waste from manufacturing processes. The system was based on just-in-time concept. Toyota production systems have been very successful in allowing the company to increase production efficiency, decrease manufacturing time, and simplify processes, all of which resulted in lower cost and better quality vehicles. Due to Toyota production system, Toyota's profit margin were 8.1% when compared to its largest competitor Volkswagen, whose profit margin was 0.5%, and General Motors' profit margin was 6.4% only. Toyota is heavily invested in a hybrid vehicles lineup and is betting its long-term future on hybrid and electric vehicles. And competency in hybrid vehicle production is yet another strength of Toyota automobile industry. The company has introduced its first hybrid vehicle, Toyota Prius, in 1997. Prius became the first mass-produced hybrid vehicle and most successful till date. Toyota's competence in hybrid vehicles is a long-term competitive advantage that its competitor will find very hard to replicate. Now let's take a look at Toyota's weaknesses. The first weakness being lack of competence in autonomous vehicle industry. Toyota has been long reluctant to invest in autonomous vehicle technology. The company has been engaged in R&D but have no plans to introduce complete autonomous vehicle in near future. The company's first attempt to developing such technology was in 2015, which only aimed at making safe and efficient driving. The company's lack of technology put Toyota at disadvantage against competitors like Tesla, Ford, and General Motors. Another weakness is the negative publicity due to large vehicle recalls. Toyota's recall rates are very high, and this draws more negative publicity than usual. In 2016 alone, they recalled 5.8 million vehicles due to faulty airbags. The company also issued a $3.5 billion of compensation for customers. Let's take a look at their weak presence in China. So China is the largest automotive market in the world with over 25 million vehicles sold. It is also largest vehicle market for two main Toyota's competitors, Volkswagen and General Motors. Toyota has only sold 1.12 million vehicles, just capturing around 4.5% market share in China. Company's weak market share in China will significantly hinder its ability to grow sales in the future. Now let's take a look into Toyota's poor brand portfolio. Since Toyota only sells its vehicle under 4 different brands, only Lexus and Toyota brands have considerable brand recognition, whereas Volkswagen have 12 different brands and General Motors 10 different brands. With only a few brands, Toyota cannot target many different consumer segments and satisfy their various needs as well as Volkswagen and General Motors with their many brands. Let's take a look at opportunities that Toyota have. Fuel prices have been low for the past few years and are expected to rise in near future due to changes in the supply. Low fuel prices have increased the demand for large vehicles such as pickup trucks and SUVs. Many companies, including Toyota, General Motors, Ford, have benefited from low fuel prices because of their strong SUVs and pickup truck offering. Toyota heavily invested in their hybrid lineups, for which the demand will grow significantly if the fuel prices will rise. Toyota could further strengthen its hybrid vehicle and electronic vehicle lineups to benefit from rising fuel prices in the future. Another opportunity Toyota have is demand for autonomous vehicle. Currently, there are about 33 companies who's working on autonomous vehicles. Few of them, including Google, Ford, and Tesla, are testing their vehicles on road, and none of them are selling this car to general public as of yet. It is hard to estimate exact demand or the market view, but it is expected to be worth $5 billion by 2025. But according to the efforts of all the major automakers, it seems that autonomous vehicles is the next big thing for the industry. Toyota have just started their work on autonomous vehicle and have no near future date when it's expected to launch their first vehicle. The company should speed up the development of autonomous vehicle technology so they do not stay behind Google, Ford or Tesla's area. Another opportunity is timing and frequency of new model releases by Toyota. The market share of automotive companies is significantly impacted by the time and frequencies of new model releases. Historically, new models have trended to have major upgrades every 4 or 5 years. However, due to the rising consumer expectation in relation in car technology and competitive nature of the industry, there is an argument to release upgraded models more frequently. So Toyota should really well position themselves to be able to do that. Now let's evaluate threats that Toyota faces today. Rising Japanese yen exchange rate is one of the threats that Toyota faces. More than 48% of Toyota's revenue come from international market, which means that the company has to convert foreign currencies to Japanese yen in order to calculate its revenues and send the profits back to Japan. Currency rates are volatile and the company profits and revenue highly depend on fluctuation exchange rates. Another threat is the automotive industry is subjected to various government regulations. The company has emphasized this issue in its financial report, stating the worldwide automotive industry is subjected to various law and government regulations, including those related to environmental matters such as emission levels, fuel economy, noise pollution. New legislation or changes in existing legislation may also subject Toyota to additional expenses in future. If Toyota incurs such significant costs related to meeting laws and government regulations, Toyota's physical condition and results of operations may be adversely affected. Another threat is increasing competition in worldwide automotive market. Despite the fact that the worldwide automotive market is already highly competitive and it's a saturated market, the competition is further increasing due to the excess of vehicle production, rapid technological changes, new entrants, and saturation of largest markets. New companies such as Tesla with its electronic car will make it very hard for Toyota to compete in electric car segment. In addition, Google, which tries to build self-driving car along with Tesla, is also a threatening and traditional automotive industry. Now, one of the major threats for Toyota is also adversely affected by natural disasters. Toyota and its suppliers have manufacturing facilities in Japan, Thailand, China, and Indonesia. These countries are often affected by natural disasters such as earthquakes, tsunami, and flooding. Every occurrence of such calamity may disrupt the manufacturing process and result in supply shortages or overall halt of production. We have seen in past Toyota operations have been significantly impacted by such disasters and resulted in huge losses. For as long as the company or its suppliers will continue to run their manufacturing in these or similar affected areas, Toyota may be subjected to further losses. Now let's take a look into Toyota's Potter's 5 forces. This analytical framework represents 5 individual forces that shape the overall extent of competition in the industry. This tool helps to determine the profitability of an industry and develop a firm competitive advantage. Let's do Toyota's 5 force analysis. The first force is threat of new entrants is a force that determines how easy or not to enter a particular market. Threat of new entrants in automobile manufacturing industry is low. This is because of a set of industry entry barriers such as huge amount of capital requirements and access to distribution channels. In case of Toyota in particular, due to its size and global scope of its operations, the company immensely benefits from economics of scale, and this benefit is passed to consumers to reduce the prices of vehicle and stay competitive. The second force, bargaining power of suppliers, is weak. The suppliers automotive industry are likely to be smaller than manufacturers and thus tend to sell to multiple automakers. While we see that supplier network with automakers is pretty diversified, they do provide crucial elements. For this reason, long-term contracts have strict standards of quality and delivery time from car manufacturers. Usually, if a supplier does not comply with the standards set by the car makers and charge too much, it is fairly easy for car manufacturer to find another supplier and even move the supply chain towards the cheaper supply market in different country. One of the competitive advantage of Toyota is its strong relationship with suppliers, and they are the ones who make long-term agreements with suppliers, and suppliers have to follow their demand. Another force is bargaining power of buyers is strong. The recent trends indicates that consumers are prone to seek out more fuel efficient cars due to rising oil prices. This also results in increasing demand for hybrid and electric vehicles that offer cheaper alternative for operating the vehicle coupled with higher expectations of product quality. Moreover, since the choices in the car market are abundant and every customer is a highly informed customer and free to make his own choice, a buyer have a quite strong bargaining power and low switching cost. The cost-cutting practices that Toyota implements in its operation to lower the buying power and puts its car into a more advantaged position compared to its competitor. Another force is threat of substitute. The threat of substitute before Toyota is moderate. From vehicles made by other brands to public modes of transportation, there are several substitutes for Toyota products. The switching costs are also quite low, and in several areas people may find it more convenient to use the substitutes. Moreover, for the middle class and lower middle class consumers, often the public mode of transport, transportation proves less costly. To moderate this threat, Toyota has released models that are low on fuel consumption, good for environment, and small family cars are also less costly. All these factors counter the threat of substitute but only to a little extent. Overall, the threat of substitute is moderate. Competitive rivalry in this industry is high, even for Toyota. In the global marketplace, Toyota competes with big brands like General Motors, Volkswagen, and BMW. The firms are highly aggressive in terms of business and marketing, and competition among them are high. Apart from technological innovation, these brands also compete in terms of design, innovation, and other features like passenger safety, fuel efficiency. The competition have kept growing in the competition have kept growing intense as most rivals operate in same markets. This also increases the cost of research and development and marketing, and most of the customers are loyal to their brands. So it's not easy to bring new customers, and the competition between the rivalries is tend to be high.
Now let's discuss some of the corporate strategies that Toyota uses in the firm's efforts to achieve strategic advantage in the automotive industry and grow the firm's market share. The mission statement of Toyota Motor Sales USA Incorporated is to attract and attain customers with high-valued products and services and the most satisfying ownership experience in America. Toyota also has a global vision that goes into more depth than the mission statement and communicates Toyota's intent to have a positive impact on all of its stakeholders around the world. The global vision reads as follows: Toyota will lead the way to the future of mobility, enriching lives around the world with the safest and most responsible ways of moving people. Through our commitment to quality, constant innovation, and respect for the planet, we aim to exceed expectations and be rewarded with a smile. We will meet our challenging goals by engaging the talent and passion of people who believe there is always a better way. Here you see the Toyota Global Vision illustrated as a tree, with the components of the vision listed within the leaves. In the roots of the tree, you have the founding principles, philosophies, values, and precepts of the company. Right at the center of it all is the Toyota Way, the culture that has driven Toyota's success for decades and continues to define the company today. In the next set of slides, we will discuss aspects of Toyota's company culture and corporate strategy in detail. The topics we will discuss are all part of a broad corporate strategy to achieve competitive advantage through cost leadership, which Toyota achieves through lean manufacturing, and product differentiation, which Toyota achieves through a commitment to quality that is built into company culture, management style, and operational processes. Toyota also demonstrates a commitment to increasing value for all of its stakeholders, rather than having a narrow focus on the bottom line or shareholder interests alone. The interests of employees, suppliers, customers, and the global community are all addressed in Toyota's strategy. The Toyota Production System is a world-renowned manufacturing system designed by Japanese industrial engineers Taichi Ono and I.G. Toyota between 1954 and 1975. It builds on a just-in-time system of manufacturing that was designed by the founder of Toyota, Sakichi Toyota. Just-in-time production became one of the two pillars of the Toyota production system, and it entailed of making only what is needed, only when it is needed, and only in the amount that is needed. The just-in-time system reduces manufacturing costs by eliminating overproduction and inventory hold times and reducing labor costs. The second pillar of the TPS is the concept of Jidoka, which roughly translates to automation with a human touch. This pillar allows Toyota to benefit from the efficiencies of automation while maintaining human input that facilitates quality control process innovation. TPS is designed to eliminate any work that does not contribute value to the consumer. The concept of quality control, therefore, does not only refer to checking for product defects, but also for opportunities to improve the manufacturing process. The concepts in the Toyota production system are a philosophical precursor to the commonly known lean manufacturing strategy. Toyota's culture empowers and encourages all of its employees to identify and eliminate waste. The TPS recognizes waste in 8 different categories. Overproduction, making too much of an end product or any individual component. Time on hand, any waiting for the next production step. Transportation, moving products that are not required for production, which increases shipping costs, waiting times, and the risk of damaged goods. Overprocessing, which results in poor tool or product design. Stock on hand, which includes all components, work, and finished product that are not being processed. Movement, which includes people or equipment moving or walking more than is required to complete a task. And product defects, which are products or components produced that are of insufficient quality to be used, which includes the effort required for inspecting, identifying, and fixing defects. And finally, underutilized workers, which includes individual talents and capabilities that are not being utilized to their full potential. One Toyota executive summarized this by saying the TPS is a framework for conserving resources by eliminating waste. People who participate in the system learn to identify expenditures of material, effort, and time that do not generate value for customers. It is a reminder that lasting gains in productivity and quality are possible whenever and wherever management and employees are united in a commitment to positive change. As I mentioned earlier, the concept of jidoka is one of automation with a human touch. This human touch is promoted within the company through a culture of employee empowerment. Each individual in Toyota is expected to act according to what he or she thinks is right. Every employee enjoys the prerogative to ignore the boss's orders or not take them too seriously. Confronting your boss is acceptable, bringing bad news to the boss is encouraged, and ignoring the boss is often excused. This culture is consistent with the Japanese concept monozukuri wa hitozukuri, which translates to making things is making people. One specific feature of the production process that empowers employees is the andon cord. Each employee is able to pull the andon cord to completely halt their production line at any time to address a quality concern before production proceeds. This instills jidoka and ensures quality in the earliest steps of the production process. This corporate strategy is one that encourages and expects each individual employee to work with a focus on relentless reflection, or hanzai, and continuous improvement, or kaizen. The notion of kaizen is to always ask yourself why a task is done in a certain way, and to always question if it could be done better. This is a fundamental feature of the broader corporate culture known as the Toyota Way. The Toyota Way is the broader company culture as defined by the organization. It consists of two key pillars: the aforementioned concept of Kaizen, or continuous improvement, and respect for people. The Toyota Way makes it explicit that respect for people includes not only customers, but coworkers, suppliers, and the global community in general. The Toyota Way has 14 specific principles that fall into four main areas: the long-term philosophy of the company, the notion that the right process will produce the right results, the concept of adding value to the organization by developing your people, and the idea that continuously solving root problems drives organizational learning. We have talked a lot about Toyota's commitment to Kaizen, or continuous improvement. Kaizen is characterized by steady and incremental improvements, and the concept has taken Toyota a long way in their production process and financial success. With the rapid pace of emerging markets and emerging technologies in the automotive industry, Toyota's executives have become more comfortable with the concept of kakushin, which is more rapid innovation or even revolutionary change. As the firm faces new challenges with emerging technologies, Toyota seeks to balance Kaizen and Kakushin appropriately to build and sustain competitive advantage. The emerging technologies in the automotive industry include electric vehicles and autonomous vehicles, which many firms are rapidly working to develop. This introduces some new competitors on the global scale in the automotive industry, including Tesla, Waymo, a subsidiary of Google's parent company Alphabet, and the ride-sharing service Uber, among others. As discussed earlier, Toyota was very successful with their Prius model and being early to market on hybrid vehicles. They have continued to capture hybrid market share globally, most recently with the launch of a new model, the CHR, which is a hybrid crossover SUV that has been the most purchased vehicle in the Japanese market among new SUVs in 2017. The company's past and continued success with hybrids is an important aspect of Toyota's reputation as industry leading when it comes to emerging technologies related to fuel economy and the environment. Toyota has a broader vision of technological development that focuses on enhancing safety, efficiency, and freedom by coupling technology with human control. They define this as their mobility teammate concept. Through their mobility teammate concept, Toyota is investing in the development of technologies that support automated driving. This technology seeks to enhance driving intelligence, interconnectivity of vehicles and traffic patterns, and cooperation between humans and cars. The Toyota Research Institute and Toyota Artificial Intelligence Ventures are the most significant investments to date that Toyota has made in emerging technologies. The Research Institute was established in Silicon Valley, California in January of 2016. Toyota has committed a $1 billion investment over 5 years to create a Center for Toyota Technology Innovation aimed at accelerating research and development efforts for artificial intelligence to support future industrial technologies and the creation of a new industry. Pictured here is the electric IQ EV, temporarily branded as the EQ for some iterations of the model. It is one of the latest additions to the Toyota lineup that is a step forward in the firm's intent to produce electric vehicles. The Toyota iRoad is the latest innovation in Toyota's electric lineup. Its size and function is meant to maximize convenience in the urban environment. This development, among others, demonstrates Toyota's strategy to innovate with emerging technologies with a specific intent to appeal to large emerging markets like India and China. By continuing to operate with the efficiency of the Toyota production system, staying true to the Toyota way, and introducing rapid innovation or kokushin where necessary, Toyota intends to continue to capture market share around the globe while maintaining the company's long reputation for unmatched quality.
Hello. Now we will talk a little bit about the Toyota's financials, including going into detail on their annual financial performance, their financial performance relative to their different company segments, their stock performance, and then comparing some of those different performances to both their traditional competitors and their non-traditional competitors. Here we have the annual financial performance for Toyota. Toyota's revenues have been relatively stable over the last 3 years, ranging from $220 billion to $250 billion. There has been a little bit of up and down tendency, though, seen by revenue growth changes of -2%, positive 11%, and negative 9% over the past 3 years. This similar trend is observed in the gross profit, with changes being negative 15%, positive 14%, and negative 5% over the past 3 years. Though the gross profit and revenues have been relatively stable, net profit this year, most recent year, is lower than it has been the past 2 years. This could be concerning for investors. One positive financial factor that Toyota has is a large amount of cash available for its operations. Toyota has nearly $27 billion in cash readily available. Toyota has also received an AA3 and P1 credit rating from Moody. This is an investment grade rating indicating low risk for potential investment in their bonds. Now we will talk a little bit about Toyota's performance relative to each segment. Toyota has two main operating segments. The first and primary one is their automobile sales segment. Here we have a recap of sales of different automobile types for the US. In the first table, we have sales for the Toyota brand and the Lexus brand. Both brands in the US have seen a decrease over the past year. 7.1% for the Toyota and negative 23% for their Lexus brand, resulting in an overall decrease of 9% in US market sales. Overall sales across the world have decreased by 1.5%, indicating that they are performing better in other markets rather than in the US market alone. The individual product lines are broken down in the lower graph. So passenger vehicles and Lexus product lines have seen the greatest changes, while Toyota has seen strong performance in both their trucks and SUV product lines. This trend continues and is observed in the worldwide performance as well, with passenger and Lexus lines also decreasing, with SUVs and trucks remaining strong. So in addition to Toyota's automobile services, Toyota provides financial services for individuals looking to purchase a vehicle. Toyota Financial Services is a wholly owned subsidiary of Toyota Motor Company. Toyota Financial Services was started in the early 2000s and is providing a relatively strong performance over the past several years. According to the chart on the right, which is in Japanese yens, you can see that the financial services revenue has grown over the past 4 years. For the fiscal year ending 2016, the financial services revenue accounted for 6.8% of Toyota's total revenue, but was actually 12.2% of their total operating income. Now we will compare the financial performance of Toyota to those of its competitors. In the table here, we have Toyota, Daimler, GM, Volkswagen, and Ford from traditional competitors, along with Tesla, which is a non-traditional competitor. All of these companies got their return on average assets, return on investment, net profit margin, gross margin, revenue, and net income shown here. Toyota is leading from net income to all groups. Its nearest competitor is Daimler from a net income perspective, which is $3 billion behind Toyota. From a revenue perspective, Toyota is second only to Volkswagen. It's $5 billion behind Toyota, but is earning substantially more net income, over double the net income of Volkswagen. From a ratio perspective, Toyota is top 3 in all the categories shown here. And gross margin is even top 2, second only to the Daimler Group. Tesla is not earning a positive net income yet, so all of its ratios are showing negative, which makes this comparison very difficult to understand. Now we will review some of Toyota's stock performance. Here we have a 5-year trend of Toyota's stock value. Over the 5-year period, it has developed a growth of $25.54, from $80 to over $105. This is a 30.5% increase over the past 5 years. Though looking at the trend, you can see most of the growth actually occurred on the front end in the 2012-2013 time period, with minimal growth over the last 3 years. This is not surprising when you review the financial performance and see that revenues and profits have not grown over the past 3 years either. The last time a dividend was paid out was in 2014. This is concerning from an investor standpoint or shareholder standpoint because there are two main ways that a stock can generate value for an investor. It can provide a dividend cash payout, or it can generate a capital gain from growing in value over time. And over the last couple of years, Toyota stock has not done that. Now, we will compare Toyota stock performance to the S&P 500. So in the chart here, we have the same 5-year trend of the Toyota stock price over time, but we've also added the S&P 500 to this trend. You can see that over the last 5 years, that on the first 3 years, that Toyota was leading the S&P 500 from average stock performance growth over time, but over the past year and a half, Toyota's value has decreased relative to the S&P 500. More specifically, the S&P 500 has grown almost 78%, while Toyota has grown only 30% over the past 18 months. Now, we will compare Toyota's stock performance to that of its traditional competitors. So this chart is another 5-year trend of Toyota's stock performance, but we've added the traditional automotive competitors, Volkswagen, Daimler, GM, and Ford to the trend as well for comparison. Overall, Toyota stock performance is very middle of the pack. Toyota is beating both Ford and Volkswagen, which have 17 and 3.5% growth over the past 5 years respectively, but is lagging behind both Daimler and GM, which have 62% and 77% stock growth over the past 5 years. Overall, though, the industry is very consistent for growth for all the companies from 2012 through 2013, but then there starts to deviate a little bit more at the end, starting in late 2015. Now, we will compare Toyota's stock performance to that of a non-traditional competitor. Here we have it compared to Tesla. Tesla is focused on electric vehicles and energy storage, not the more typical combustion engines that Toyota is heavily involved in. Over the past 5 years, Tesla's stock price has skyrocketed, growing by over 1,000% compared to Toyota's 30% growth over the past 5 years. Tesla is a new company, though, with a new technology, so stock growth comparisons can be easily skewed by this fact, because 5 years ago, there may have been a high level of doubt or uncertainty in Tesla's technology, whereas now there's a lot more confidence. Tesla also has a large market capitalization of almost $59 billion, but still is not generating a positive net income from its operations. And stock price is even taking a dip in recent news due to its underperformance of its new batteries for its new automobiles.
In conclusion, we feel like Toyota is in a good position moving forward and have some opportunities to continue with their success. Thank you for your time.